So, John, how are you doing today?
Fantastic. How you doing, Michael?
Well, I am doing reasonably amazing. Thank you.
Reasonably.
Yeah, reasonably
That's a good
amazing.
way to put it. Yeah.
Working through the technical difficulties, et cetera, et cetera.
Yes. Yeah.
So, during the intro,
Understood.
I mentioned to everybody that you are the president of Starship Investments, Inc., and also the host of a new financial podcast called Phoenix Rising from Ashes to Assets, which I have to let everybody know. When this show first airs, it'll be Sunday, February the 2nd in Southern California. That's the same day your podcast goes live, isn't it?
Yeah, that's fantastic. Good timing.
Good
Yeah.
timing
Worked out that
and
way, huh?
worked
Yeah.
out really good. And also, it's the same day it's going to hit all the other podcast channels like Spotify and Amazon and Apple and everybody else. So we're excited about that. So before we jump in everything, why don't you tell everybody a little bit about yourself, who you are, your background, and then we'll kind of morph our way into what's happening now with Starship Investments. Tell us a little bit about your early days in your business.
Yeah. So I grew up in Southern California, and I went to La Cañada High School, and so I grew up in the era of great music and TV shows and all that. I grew up next to Oak Grove Park, so I was an avid frisbee golf player there, the world's first frisbee golf course. And behind our house was the Jet Propulsion Laboratory where my dad worked. So I kind of have a lot of interest in, space exploration and things like that because of from my dad. So I guess that's how I kind of came up with the name Starship Investments. Also, I'm a big Trekkie, so I love Star Trek.
Hmm, I did not know that.
Yes. Yeah.
I would
Next
do the live
generation.
long and prosper thing, but my fingers don't go
Yeah.
like that. So,
Yeah. 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 I had friends that would come over and we'd all sit around. I had the biggest TV. I had a Sony rear projection TV. That was a big, huge box that sat in my living room, and I had Cerwin Vega speakers on either side. And so everyone would come over and we'd sit around and we'd watch Star Trek when it first came out. And it was just, God, those episodes were just so much fun. They were so good. They were so well written. And I actually have a kind of a like a it's like a picture of the Starship Enterprise, but it's done graphically really well. It has like all of the different things about the spaceship, and it's in dedication to Gene Roddenberry. It's pretty cool. I should put it up behind me. Maybe I'll do that for one of my shows. It's
you
really
should.
cool. Yeah.
So I want to kind of mention to everybody that when John and I been talking the last couple of weeks. It turns out that John and I grew up in the same area. So he was in La Cañada, La Crescenta, which is one of my old stomping grounds, and also Sunland, Tujunga. And one of the most magical things that we discovered we have in common is Monkey Canyon. And he's the only other person I've met my whole life who knows where and what Monkey Canyon is.
Yeah, I know. I was so surprised to hear you say that, Wiki Up and Monkey Canyon and yeah, so I used to spend a lot of time up in the San Gabriel Mountains. LA is unique because no other city in the world has 10,000-foot peak right there. And so the San Gabriel Mountains, I was always up and hiking in the mountains, bagging peaks with my friends, and so I love the outdoors, backpacking, camping, all that stuff. So it was right there. But yeah, that's so fun. Monkey Canyon.
So tell us about your early career in business. What'd you do and how you get started, and how did that lead you into where you are now with Starship Investments?
So yeah, so I still have a security company. I started back in 1988. I lived in a little bachelor pad, and um, I would just drive around in my truck and meet contractors. And I'd come home. I had a typewriter on my kitchen table, and I would sit there. And I'm not the greatest typer in the world, but I would sit and type out my contracts because I wanted it to look nice. But yeah, I started my company with nothing. I struggled early on, and so uh, starting out in business is not always easy. But I just kind of stuck with it, kept doing it, and so 38 years later, I still have that business, but I'm kind of stepping away from it a little bit because I'm, starting out on this new venture. So
Yeah.
yeah,
Well,
so
tell us about your new venture. I'm going to tell us about Starship Investments Inc. and what makes you unique amongst all of the other investment companies that people have to choose from. And folks, I really want you to pay attention to here because John has probably the most unique investment strategy program I've ever heard in my life. It looks to be very powerful and it involves buckets. So tell us about that.
people are like, oh gosh, buckets. Yeah,
Bucket.
but you fill with water or fill with gold.
Let's fill it with
Yeah,
gold. Yeah, tell us about
yeah,
that.
yeah. So it's unique. It's actually very simple, but most people won't get it. If you're from the traditional finance, then it's going to be kind of very outside what is the norm when it comes to investments. So it's actually very simple, but I kind of call it like having the bare essentials, like vitamins, like your 7 essential vitamins you're supposed to have. So these buckets have those essential vitamins. They're in all the things that you need in life. And so these assets are something that you need in life. It's kind of like an emergency pack too. So it's got all of those elements, and then there's a timing mechanism in it so that if you have a stock portfolio and the stock market crashes, and people, you've heard about the stock market crash of 1933 or whatever. I don't know
Yeah.
what year that was, but something like that. Everybody kind of lost everything, and then there was the Great Depression. I think the stock market is kind of overvalued right now. I think that as long as there's liquidity, the stock market is still going to go up. But I have built into this, even if all of these assets were to crash, there's still the ability to keep it going. And because over time, everything bounces back, if the real estate market crashes or if the stock market crashes, as long as you have the time to recoup. And so built into this is the ability to keep it going until things rebound. So an important element of uh, what I've built here. And it's not a software program uh, or anything like that. It's basically just like I said, the bare essentials. It things that you need in life. So by having these assets, you really don't need to sell them because it's got everything you need. If you have an asset and you don't have to sell it and you can borrow against it, that's what you want to try to do. And especially if those are assets like real estate, you need a home to live in. Uh, it's nice to have a stock portfolio so you get the upside of stock. Yeah, so that's what's kind of makes it unique.
Yeah, one of the things we talked about the other day when we were doing during your doing your podcast was it's
Yeah.
very similar to um, allowing a person to be their own bank, where instead of going to the bank and borrowing their money, you're actually creating, and I'm going to use the term buckets because it's like you're borrowing your own money, and you
Hmm.
don't have to. It's done in such a way where it mitigates any tax liability that you may have. You don't really have to pay any interest because it's your money. And it's a very,
Right.
very unique concept. So it allows you to become your own bank. Tell us a little bit more about that concept and how it works and what makes it so amazing. I've tried to explain, sir. I've tried to explain it to people and they go, so I never have to pay the money back? Well, no, it's your it's your money. Who are you going to pay it back to? Tell us a little bit
Uh,
more how that works.
yeah, that's right. That's where a lot of people, I kind of lose them because they just don't understand that concept. And then they're like, well, at some point, don't I need to have money to live? Well, yeah, I mean, of course, you're going to need money to live, and you're going to probably have some other means of making money at your job or your career or whatever it is that you're doing. Um, and some of these assets will actually generate money over time. Real estate, you can is part of this portfolio. It's about a quarter of it is real estate. So real estate, I think there's a lot of tax advantages to owning real estate. Obviously, you need a home to live in. So, but you can also have in this rental property, which can generate income. So there is other things like short-term treasury bonds that I have in this that can yield a 4 or 5% return. And as you build those up, that can become pretty substantial. So, but the key here is that you have these assets and you don't really ever have to sell them because, I mean, you could if you wanted to at some point, uh, but you really don't have to because they just are going to keep going. Why would you sell things that are going up in value, you know? And so these assets are everything from, like I said, real estate, a stock portfolio. I have crypto in there, and I think crypto is it's an asset that a lot of people don't really understand. Specifically, Bitcoin, they just haven't taken the time to really understand that asset and what it really is. Even people that own Bitcoin don't really know. Institutions and uh, you know, retail and policymakers, they don't really understand this asset at all. But I've gone down that rabbit hole. I really understand it really well. And so what this also does is give them a little bit of exposure to things like Bitcoin. So there's a huge upside to it. And even if it were to go to zero, like some people think it could go to zero, I don't think it will because it's already a $2.5 trillion asset. And I think it's just only going to become more valuable. You would still be okay. Your other buckets would hold water, so to speak, so that you'd still be okay. And then the down cycles of there's cycles. I call them a 4-year cycle. So every 4 years, well, there's a component to this that gets a little more complicated. I don't know if I'll really go into it today. That we can cover that in some other shows. But yeah, there's definitely, you know, anytime you own assets, it takes time for those assets to go up, but they will over time go up. And so that's where you always are. You never want to sell an asset if it's always going up, if you don't have to.
Yeah.
Why would you sell an asset that's going to continue to go up forever? You can pass it on to your children, your grandchildren, and you can help others. You know, if you have the ability to help people, there's another aspect of what I'm doing that is really important to me in kind of like giving the generation coming up the ability to create and dream, you know, to be able to follow their dreams, and so that's something that I would like to speak to at some point too, about how the kids today, you know, they say that they won't be able to buy a home and things like that. And I don't necessarily believe that. I think that there's going to be a lot of opportunities in the future, but it requires capital. And uh, if you go out there and try to get money, it's not always that easy to do. It's one of the hardest things to do, even though there's a lot of it out there. And so I think there needs to be an avenue for people to be able to, uh, you know, live their dream, create whatever it is that they're building, founders that have an idea or maybe have an invention, and you just need a little bit of capital to get it off the ground. And so there's a component of that in this that we can get into that is really an interesting part of this as well. It's important
Yeah.
to me.
I want to hear about that. Before we delve into that area, I'm
Mhm.
I'd be interested in hearing you explain the bucket principle because I know you have different buckets, all the way from what is it, a $40 billion bucket down to a
Mhm.
4 billion, and then all the way down to several $1 million bucket, and then the cheap $500,000 bucket. So explain,
So
explain. bucket principle to me.
Yeah, so if you take, for instance, the $4 million bucket, which it if you look at what the growth is of that, and I'm gonna go back 4 years and 8 years because I basically figure things in a 4 year time period, and I'm going to show if you had bought this $4 million bucket 4 years ago, what it would be worth today, and it's my already initial calculations are it would be in close to 100 million already.
Wow.
But I think it's going to be much higher than that. But I have to sit down and do the calculations going back 4 years, 8 years. So I'm going to do that so I can, because you want to be able to show people, well, how do I know this is going to do very well? And you can look into the past and see, and what happened in the past doesn't necessarily mean that's what's going to happen in the future. I understand that.
So what's in the bucket? What are we putting in there?
So it's a mixture of different things that are in there, and so I can't get into all the details of that, but I can kind of. So let's get back to what I was saying about like the $4 million bucket. If you All the other buckets are the same. So in the $4 million bucket, if somebody purchases that $4 million bucket, basically they're getting four because the first bucket will leverage against buying the second bucket, which is half the size of the first bucket. And that goes on to the third bucket and the fourth bucket. So now you have four buckets of the same assets, each one half the size of the other. And those are all growing together at the same rate as those assets go up in value. And there's some reasons why I did it that way. But if you look at that bucket and then you look at the next one up, the $40 million bucket, it's going to perform exactly the same as the $4 million bucket. So you can take that out. My $4 million bucket right now, I'm projecting very conservatively in 20 years will be 400 million. I know
Wow.
that sounds like a bold statement, but it absolutely mathematically works out to that.
So in the bucket are various assets, which include utilities, Bitcoin, crypto, real estate. That's what's in the bucket. So if I'm in the
Precious
4
metals,
million, hmm?
precious metals.
Precious metals. So if I'm in the $4 million bucket, am I the only person in there, or are there other people who've also purchased a presence in the $4 million bucket, or am I the only guy in the bucket?
You're the only one in the bucket. There is a so my company would actually have a portion of that bucket, and the reason I do that is so that we become like partners. So we are truly partners in this, and I won't ever sell, and I'm going to convince my investor to never sell. So there's a component of me having like skin in the game, so that I can so that my investor will understand that by us partnering, it's going to be really powerful because of what we're kind of building together. And I don't need a lot of these clients. It's going to be you know gradually and then massive, I think. I'm kind of looking for a certain kind of a person, and it's going to take a certain kind of a person that's going to want to do this kind of investment. And I kind of have like a questionnaire. It's not really like a litmus test, but it has to be the right kind of a partner for something like this. And I actually have my 4444 bucket is kind of for a very special person.
What
Because
which is here to not be named at this moment in time from
yeah, no, I mean, I think there could be several different people. They would obviously have to have the means to do it, but yeah, I mean, there's just there's certain I don't. There's a lot of people out there that have a lot of money out there that I just don't really have a lot of respect for, because I think they could be doing a lot more than they
Yeah.
are.
Yeah.
Um, and I don't really want to get into the specifics of that, but you know what I mean. It's like there's people out there that have the means that are really doing a lot of good, and those are the kind of people that I want to talk to. You know, so yeah, I know that's kind of sounds funny, but it's true. You know.
Yeah. From what I understand, your program is geared to a special type of investor. It's not like every investor is going to want to jump in there. So, I who have $214.87, I'm not your target market that I want to invest. And I'm going to invest all of it, all $200. Yeah. So you're looking for a very special investor type of a client.
Type of investor, yes, that's right. Yeah, 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 yeah. I mean, you could get together with friends and invest in this. You know, I'm considering doing like a $400,000 and a $40,000 bucket, but that's not really the target market that I'm reaching out to right now. I could see that maybe happening down
Yeah.
the road. You know, something
So
like
let's
that.
say that I want to be in the $4 million bucket, but I don't have $4 million, but I have three other friends that each have $1 million. Could we create an entity or an LLC and then kind of band together and jump in the $4 million
Yes.
bucket as a group?
Yes, absolutely. Yeah. So that's another thing you could do. This has a lot of there's a lot of variables, but there's a lot of flexibility too. So there's all kinds of things that we're going to be able to do with these buckets of assets. And so there's so much flexibility that you could use these assets for. For instance, one of them is a stock market portfolio. So if you already have like a stock portfolio, that could actually be put into this bucket.
Oh,
Or there's other mechanisms that I was talking to somebody the other day. They have a stock portfolio that's growing at about 20%, which is pretty good. So that vehicle could be part of this one of those buckets within the bucket. So one of the assets inside all four of those buckets, because each bucket has a portfolio of stock.
yeah.
And so there's the biggest bucket, and then there's the next size, and the next size, and the next size, all the way down. So you're actually going to have four separate bucket assets of stock in each one of those four buckets, and then also of real estate, of crypto, of precious metals. Of I have a specific stock that I have in this for a certain reason, and there's a very good reason why I have it. And so, but that could definitely be something different. Like if somebody has uh, a stock that they really believe in, that could be, they could say, well, I want to put this stock in it for these reasons. And if they have enough good reasons to put it in there, then by all means, we could do something like that. So there's a lot of room for flexibility in this.
Well, that's good. So if somebody puts in their stock investment portfolio. And let's say we're going in the $4 million bucket because yeah, that seems to be comfortable there. So what happens if the investment portfolio that's in the bucket when it initially went in the bucket met the criteria to be in the $4 million bucket, but over time the value of the stock portfolio went down? Would they be kicked out of the bucket, or how would that work? Is it based on value at the time of the investment into the bucket, or because we all know these things fluctuate up and down?
Mm-hmm.
So what
Mm-hmm.
would that be based on?
So no, that would stay in there. Two out of the, let's say, six asset classes that are in there could fail, and the other ones are going to kind of hold it up because there's correlation, and then there's uncorrelated assets that are inside here. So typically, if one goes down, the other goes up. But it really doesn't matter because usually if a stock goes down or a stock portfolio goes down, within a year, 2, 3 years, it's probably going to come back. And there's also the ability to buy back in if the things go low. In fact, well, yeah, I don't want to get in. There's an element to this which really can make this thing take off like a rocket. That in the lulls of a kind of like the microclimate of the ecosystem of all assets in the world follow a four-year cycle. There's even longer cycles, but in each of those cycles, they're typically, and it has to do with liquidity. It has to do with even presidential elections can affect liquidity cycles. So like I see like 2024 and 2028. 2028 is kind of, and 2029 are kind of the height of the next cycle. And the down cycle in the next is like 2030. So in that down cycle of that 4-year period, we can actually buy assets, buy those 4 buckets again in the down cycle. So now you've got 8 baskets. And then in another 4 years, you're going to have 12 baskets. And then, so in 20 years, you're going to have 20 baskets, all the same assets inside there. But you can see how that compounding is just absolutely, it's like, I don't know. I can't even believe that somebody else didn't think this through. But I've come up with this, and it's very unique in the point that you're over time, not only are you not selling your assets, but you're increasing them every 4 years. You're basically doubling them. Now, you got to keep in mind is that assets that you're buying, all of those have also gone up. So you're going to be buying them at a higher price, but it doesn't matter because in another 4 years, they're probably going to go up again, right?
Yeah.
So, and so there's an element to this of like exponential growth over a 20-year period. And you could actually continue that forever.
Wow.
You could just
So
keep going.
this is something that can be passed down generation to generation and build
That's right.
generational family wealth.
That's correct. Yeah.
Incredible. We
Yeah.
only have about a minute or so left here, John. If
Yeah.
somebody wants to know more about these, what's the best number that they can call you?
So my cell phone right now is just I have that's probably the best way to reach out to me. 818-427-9196.
Okay.
Yeah.
And your new website should be up and running here in the next few days, and that's starshipinvestmentsinc.com. And I
Mm-hmm.
believe your email on that is going to be john at starshipinvestmentsinc.com. Probably the best way to get a hold of you.
Yes. That would be the best way to get a hold of me also. Yeah. You could shoot me
I'm
an
going
email.
to
Yeah.
say your phone number one more time 818-427-9191. If any of you guys have questions, this is probably the most.
9196.
Oh, excuse me. I'm going to
Yeah.
do that again. Yeah. Good thing that we're
Okay.
live.
Okay.
96. Yeah.
Yeah.
818-427-9196. I need to
Mm-hmm.
learn to write better. John, thank you very much. It's been a
Yeah.
pleasure
This was
today.
fun.
Yeah.
Yeah.
Be sure and keep an eye out for your new podcast, Phoenix
Yeah.
Rising Assets to Assets. And you guys have a great day. I'll see you again next time with another exciting adventure in the world of how to make it easy for people to give you money.
Thanks, Michael. See you later. Okay.